welcome back, everyone. This is the Forex Market Preview. My name's Jason Stapleton. Thanks so much for being here today and being part of what I'm doing. And we're going to take a look today at some pattern stuff. And as the video denotes, we're going to take a look at when it's a good idea to use patterns and when maybe you want to steer clear of a pattern. And before I get started on this, one of the things that I want you to understand or to be aware of is that we have spent a lot of time, especially after the even before the Constellation software, which is our pattern recognition software, was released, we'd spent a great deal of time playing with the ratios that we used in the patterns. And if you go online and you do generalized searches, you're going to find wide variations of what constitutes, say, a Gartley pattern or what constitutes a butterfly pattern. And what we found through our testing is that there is a massive difference in the profitability and the probability of success of a specific pattern based on the ratios used. And we did some more testing on this to validate this point when Constellation was developed. And the partner that we had on that was shocked to find out how different a Gartley pattern was in terms of its profitability when you changed the ratios. And so I would caution you guys. We have training courses on it. You can go watch free how to trade a Gartley pattern on YouTube on this channel, or you can go and you can watch any one of the dozens of videos that we have on different types of structure trading and things like that. If you're interested in learning more about it, I would just caution you. If you're going to trade patterns, know what you're trading. Know the probability of the pattern. Know the correct ratios to be using. Otherwise, you could be trading in futility. But with that said, let's take a look at a few different patterns here. Hang on here. There we go. Let's take a look at a few different patterns here. The first one's on Euro USD, and what we have is a Gartley pattern setting up right here on the daily chart. As you guys know, I try and stick with daily charts just so that you guys have a chance to see it happen. And even if you might not have the capital to trade daily charts, it's still, the educational value is still relevant to us coming here together every day. And if I go ahead and just draw in the pattern is a series of ratios, as I said. For us, the Gartley pattern is 618, 618, 127 extension. So in this case, we had a deeper leg here of the B2C leg. And what we're looking for is the completion of this move. Now, we may be a little bit premature with this, but that's all right. We can still talk about it. What we're looking for is the market to come up, make a couple of moves, and then to end up terminating at a 127 extension of the A to B leg. So we've got a 127 extension here, comes in at 106.44. That's where we want to see the market go to. So if I grab my little line tool here, I should grab an arrow tool. So right now we're trading here around this 111.02s. What we would need to see is the market to decline down into the 127 extension, in which case we would be looking to be a buyer. Could see will the market go the other direction. If we want to look for stop placements are typically below X here, the initial starting leg of the move, or what we would consider the anchor leg. But if you look left, we've got another little support level right here. And here's my advice to you: is if I'm going to put stops, I'm going to look to put stops under this swing low, not this swing low. So I'm going to take my swing low here, maybe subtract 20 pips, and that's where I'm going to put my stop. Because I don't want to be into a position where the market comes down, it might violate by 20 pips or so this swing low, comes in to retest this one, and then rallies right out off of it, and I lose the trade because these two stops are so close together, or these two legs are so close together. So I would get my stops below this swing low here. Let's move over to the pound dollar. Pound dollar is setting up a cipher pattern. Cipher pattern looks like this. Again, it's still the daily time frame. Go swing, boom, to here and back down in. And then we rally up. And then we come back down. We're going to come down somewhere into about a 786 retracement, which should be right there somewhere. I didn't pull these ratios. I should probably do that just to check. I get a little ambitious sometimes. So initially, market makes a 382 retracement. We then rally. The market rallied to the highs here. These highs came in at a 127 extension. And now the market is on its way down. And if, it's a big if, but if the market will come down into this 786 retracement at 148.29s, we'll look to be a buyer. So again, we're hoping that the market will continue to decline down into the 786. If it hits the 786, we're going to be buyers looking for the market to rally. And where do stops go? Look left. Structure leaves clues. There's the previous swing low. We're going to try and get stops under that swing low. All right? Or we need to have stops underneath that swing low is the way I should say it. Now, both of these, and again, I've changed up my video a bit, so I'm going to change video cameras because I don't really like the way this one's working. But for right now, hopefully I don't have audio sync issues. But if I do, just close your eyes and listen to me tell you this. Both of these are relatively good trading opportunities. Number one, because we know the profitability of the pattern, and we know the risk to reward ratio of the pattern. So because we know those two things, we know that statistically these are going to be good patterns to trade. But that's not always the case. In some cases, you're going to come across patterns that present you very poor opportunities, even though the profitability is fine, and even the risk to reward may look okay. But let me show you an example. In this example, we're going to have see, it's Euro Aussie. In this case, with Euro Aussie, we've got a butterfly pattern. And one of you guys who have been training with me for a while know I don't like butterfly patterns except in specific situations, and here's why. So we've got this butterfly pattern, looks something like this. Okay. Now, as I consolidate up my chart here, what you're going to see is the butterfly pattern should complete at the 127 extension. And so what we should see is the market to rally up in here into this 127 extension, and then the market ends up coming back the other direction. Now, we need to leave a little wiggle room, because if we go back here to the pound-dollar trade, or let's go to the euro-dollar trade, what do we notice? We notice that even though we're looking for the 127 extension to be our buying opportunity, we've got our stops all the way below this swing low here. Now, that gives us some room. Okay, we're basically saying, look, We're basically saying, hey, I'm going to look for a little bit of reward here for a little bit of risk. And well, let's assume that we're not going to use this swing low, even though that's what I just said for the purposes of training. So we know that the stops need to go below X. So we're looking for a risk reward, but we understand that the market may continue to decline past the 127 extension. So how are we deciding where those stops should go? Well, we look left. And we say, according to the Gartley pattern, in order for this to be a valid pattern, D, the end of the completion at the 127 extension, should occur inside of this initial X to A leg of the move. So I got basically this much room that the market should be allowed to move, still having a valid pattern. And so what I do is I move my stops just below that, and I say, all right, well, if the market moves that full distance and then a little bit more, I'm going to get out of the trade, because all of my rationale justifying getting into this trade is now no good. So let's switch over and let's take a look at Euro Aussie. Same basic situation, right? Except look at what happens. In a butterfly pattern, the completion of D is already outside of X, the initial leg of the move. And that's something that happens with every single butterfly pattern. Every single one of them is going to have the D completion outside of X. So where do we look to put our stops? Well, typically what we do is structure. So I'm going to look left for structure, but look at where my next structure level is. My next structure level is all the way up here. Right? In some cases, I may not even have structure. Like if I'm dealing with some of the yen pairs where we've moved on to new equity highs and there's just no structure there looking left, what am I going to do? Well, there's nothing that I can do. I've got to look at this trade and say, I can do some things like using ATR calculations, average true range, waiting for reversal candles or something like that. But ultimately, when I look at this, I don't have any way to rationalize a stop placement. And so in situations like this, what I tell traders is you've either got to come up with another situation for this type of pattern that still gives you a good risk-reward ratio and still has a good win-to-loss probability, or you're just going to have to leave this pattern alone. Even though you recognize it, even though it's there, It just doesn't work because you can't justify entering the trade. And this is something that that I hope that becomes apparent to all of you, especially those of you who have been going through the Syndicate with me. Because as you guys know, maybe some of you don't know, every day we do this live in the Syndicate in War Room, where I come in, I show you what I'm trading, Akil posts what he's trading from the live trading room and does some videos each week. There's a little training course that we've started putting together for you guys there. And every day we come in and we talk about process. What are you doing? What is the process that you're using? How are you staying disciplined? And we talk about how you do all of these things. Not just the technical side of it, like, how do I calculate a new structure high, or how do I use ATR in order to look at potential buying and selling opportunities? There's much more to it than that. What it really comes down to is your ability to stay disciplined. Your ability to do the same thing over and over again, because you know that if you do that, you have a high probability of having a result that you're going to be happy with. And so over the course of this week, take a look at what you're doing and ask yourself, are the patterns that I'm trading, do I know what they should be? I mean, I know what I've read online. Gartley patterns are 70% accurate, but have I tested that for myself? Do I know for sure that what I'm doing is going to be profitable over time? Have I written out my trading plan? Do I understand how I'm going to deal with certain things like this butterfly pattern situation where I don't have good stop placement? And rather than just placing the trade and then trying to figure it out afterwards, how am I handling this ahead of time so that when it happens, I'm not surprised, that the market doesn't throw me off, that I don't get confused or anxious? I already know what I'm supposed to do. Those are the keys that define a good trader and that separate good traders from bad traders, is the ability to come in, maintain your focus, maintain your discipline, and to know that what you're doing has a statistical probability, not a guarantee, but a statistical probability of being correct and being profitable. If you do those things and you have that trading plan and you have all of that together, then it really just comes down to the discipline. And I'm going to tell you what, guys, the discipline will become a whole lot easier for you if you have those things than if you don't. In fact, I can virtually guarantee you that if you don't have a trading plan, if you haven't tested that plan, if you don't know that that plan has historically made money, then you stand an almost impossible task of coming in every day and trading consistently. I've never met a trader who can do it. I've never met a trader who comes in, sits down at his desk every day, has got no real idea. He just kind of does what he feels like that day. Just kind of looks at the market and gets a feel for it and then just kind of places trades. I've never met a successful trader that does that. Every single losing trader that I've ever met uses some combination of that logic. So do yourself a favor. If you don't have those things in place, if you don't have a plan, if you don't have a strategy, if you haven't tested it, then stop trading immediately. Stop spending money, close out your accounts, open up that demo account, and do not start trading again until you have those things in place. And if you're saying, well, I don't know how to do any of those things, well, that's why Trade Empowered exists. That's why my company, that's why we started it, is to help traders do those things and to help them become independent, consistently profitable people. And you guys can join the Syndicate. It's $1 for a full month. You can see it's the cheapest thing that you will find and the most value you will find in the market on a day-to-day basis. We meet every day, 5 days a week for 20 minutes a day, where I talk about what I'm trading or what I'm not trading. Because if I don't have trades, I don't trade. And we talk about the theory and logic behind why we're doing what we're doing, and we talk about the discipline. And if you're looking for a place to plug in, that's probably a pretty good place to do it. In fact, I don't know of a better place for you to do. So the link is there on your screen. You can use that. You can go to tradeempowered.com and you can look at all of the free training and resources that we have there. We have 20 or 30 hours of lecture and practical application training on that site that you can go and get into right now. We've got free trading strategies that we show you and teach you step by step. I walk you through all of it. It's all free. Just go and start learning. Because I know if you do that, you're going to be in a position where you're going to be hungry. You're going to start to wake up and become aware of all of the mistakes that you're making. And my hope is that it saves you some money. My hope is that you are wise enough when you see the losses and you watch the training that you realize, yeah, I really don't know what I need to know. I really need to stop trading. I really need to save my money, and I need to get back into treating this like a business, because every successful trader that I know treats it like a business. So again, enough of the lecture for you guys. I hope you have a great week. I hope to see you in the Syndicate tomorrow morning, bright and early. But if not, I'll see you next week right here for a Forex Market Preview. Until then, good luck and good trading. I'll talk to you soon.